Yeah,
Look at this thing.
yeah. Two up, two down.
Look at this
Hey,
thing. Got
yeah.
money.
Yeah, I wanted the crown and to be celebrated. I rented a tux and I ordered a mink. Stood in the mirror like mama, I made it. Proceeded to brushing the teeth in the sink. Caught me a grill and I'm so melanated. I polished the chain, I ain't gold in the link. And I got me a baby who gave me some babies. I'm raising a lady and building a king. Too cold, you too busy running with another man lane, I guess. Yeah, too bold. I be running on the one way, never change my set. Like, I don't ever use my signals. Yeah, I be in the lane myself. Yeah, I don't gotta change my mental. Yeah. And I ain't gotta chase my wealth, and I accept my daddy got a kingdom, and everything I ever got is his. If I ever got a problem, I'ma seek him. I never doubt him. Been about his biz, oh man. Been there. I ain't gotta ride on the wave when the ocean is his. Close with the kid with a
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What to do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Cliff, what's going on, bitch, baby? How you doing, big time?
Man, I'm doing good, Had a good week. It's ending strong, so man, just staying with it, man. Staying with it.
Yeah, did we get the bag, big dog?
Yes, sir. Got the bag this week.
Yeah, I got the bag too, man. I'm working on a couple big ones as well, also, man. And we actually had a closing on the refi on one of our properties in Jackson. Yes, great, but it was a battle. That was a battle, man. It has been a barn burner, guys, when it comes to some of this stuff, Cliff. Am I lying or am I telling the truth, big dog?
No, man. It's business. And anytime you get into business, you're gonna have problems. It's there's nothing that's just gonna be straight up. One of the best things I've ever heard about it was Jeff Bezos.
Mhm.
And he said, I've been in charge and I've been CEO of Amazon for a number of years. And if you look at our stock, the stock chart, it don't go straight up.
No, it
It
don't
goes
at
up,
all, man.
it goes down. So that's part of it.
Yes, sir. If you are in any type of business and you're expecting for it just to do this the whole time, you are delusional. It should be doing this. It should be doing this. It should be doing this because it's business. And when you're in tumultuous times, you got to be able to pivot on the fly, whether it be title companies, whether it be bankers, whether it be realtors, whether it be mortgage bankers, whether it be the government, whether it be inspectors, you name it. You got to be able to pivot. Am I right, Cliff?
Yeah, 100%. Yeah, you gotta stay on top of it, man. So it's part of it. So
It is.
and you gotta find the pace that works for you.
We do, man. And guys, we're live back on Instagram again, guys. Took a little bit of a hiatus on Instagram. We're back, guys. I've been people have been looking at me kind of like side eye. Y'all, we back. My bad, y'all. We back. We back. But guys, let's get into it, guys. Current market analysis, man. Again, we have the blessing of actually having a private equity banker as well as a licensed appraiser on this live. So, Cliff, what are you seeing? Boots on the ground. What are you seeing when it comes to the market, big dog?
Man, I got an update for y'all this week. All right. Man, I am seeing movement. Exactly what I've been calling for a while, that I think everybody is pivoting and starting to get ready for the interest rate cuts. We are in the interest rate cut cycle. So I think you're going to start seeing mortgage rates start coming down. Just to give you an example, so I work with a number of banks that come to me for appraisals for all different kind of reasons. I have seen a 30% increase in the last 3 months or so. And I've been tracking it in the last like 2 months, it's been going up even more. So more mortgages are starting to get done. People are seeing the interest rates drop. I'm seeing refinances. I haven't seen those in a while, but I've seen several this week and going back to last week. And I'm looking at going through my statistics, so I'm starting to see it coming up like that way. I think it may be. I don't really flip that often. I do like to flip sometimes, but I'm thinking the next year and a half may be the best time to flip because there's
Mm,
gonna be more people buying. They're gonna start coming into the market and start buying, and the inventory is still low.
mm. So you still believe that there's going to be some rate cuts here?
I do. I think we're gonna see 25 on this next one. I was watching BlackRock, the CEO of BlackRock, and he believes it should be 50. Um,
50?
he thinks it should be 50. Basically,
The
he
hell?
he believes we are in a recession.
We've been in a recession for a long period of time, so it's not a theory; it's a fact.
Right. I mean, we've have a number of different things going on in the market that aren't on the up and up. So we're getting jobs numbers that need to be adjusted. They're being adjusted $800,000 lower. We're seeing again the job growth is slowing, so there's less and less jobs coming through.
Hmm.
Um, I mean, the real estate market's really dead because obviously the interest rates, but like going back to what Dale's talking about, the jobs aren't there, and the people are in really bad conditions with credit card debt. I think
Yeah.
the average credit card debt is almost $10,000 at this point.
Yes, they are. That's been my whole issue when it's coming to this whole scenario. Is whenever there is a recession or a downtick in the marketplace, right? What actually happens a lot of the times is people don't look at the fruits of what's actually happening, what's going on. So yes, and the recession is 2 consecutive quarters of negative GDP that has been present since the beginning. Now, if you now people will point toward the job market. I'm not going to get into that. People are going to point toward the inflation rate, which has been manipulated. I'm going to get into that. I'm looking at the fruits of what's going on. People have record amounts of credit card debt and really limited savings. Right, there's a big dichotomy there. Then you also have inflation outpacing wages. So you're beginning to see the fruits of this economy, and it is not good at all. So my whole thing is this here is how are they going to cut? Now, I'm not saying that they're not, because I believe that they are, but I don't think that the amount of the response of the consumers is not going to be what people think it's going to be because of those two variables itself. I think there's going to be very little movement in the market because people ain't got the money to move. They ain't got the money to move. Am I right, Cliff? Am I wrong?
No, I mean that's what the Fed's goal was, right? To stop the spending of money. And what
Yeah.
happened is that because we see it in the jobs numbers, what happened is the first people it hit was big business because they can't
Yes,
when they borrow billions. So
they
that's
do.
so now they can't have access to billions or even smaller companies millions.
Correct.
And because they can't get the borrowing power. That may be to expand, that may be to buy new equipment. And
Correct.
so there's no new jobs. And then what ends up happening is because their clients or partners can't do the same thing, it creates a cyclical effect on other one, and you start to see the entire economy start sliding backwards. And I think what may end up happening is they may cut stronger than we even think to try to spur the economy back to pump it up again. Um, I think the first sign of weakness is really going to come if they do a 50 basis point cut. When they see that first 50 point basis cut, that'll be a sign that we're in real weakness.
Hmm. And I think that rate cut. I think that a lot of people don't want to see that because of the weakness itself. That's what it's
Right.
going to
Yeah. Yeah.
show.
Yeah.
And so it's kind of a PR thing going. I tell everybody the Fed is the world's biggest PR agent, public relations agent. That's what they are. They're trying to control the thought process of the consumers via the rates and things that nature, interest rates. So it's just guys, it's and you also have Cliff in 2025. You know what actually matures? That was coming up. Those commercial paper apartment complexes, office building, warehouse things of that nature. Those loans that have that are interest only, right? Those loans. So with those loans, what actually happens when they actually mature? What happens then? People, there's going to be a serious correction in the commercial paper sector because those IO loans, interest only loans, are going to mature. And now what? You agree, Cliff, or you disagree?
Yeah, no, I agree. I mean, if you're on an interest only, right now is a bad time.
It is.
But I mean, with cuts comes usually with cuts comes spurring of different things, and they're going to try to relaunch this, the entire economy again. But to your point, how far are we going to fall before that starts to work?
Mm-hmm.
And it may not. And that's what I'm
Mm-hmm.
saying is the fact that they're cutting shows weakness. Period.
Mm-hmm. Yeah.
So yeah, I think the average person is not doing that well.
Mm-hmm.
It's harder to find a job. It's harder to
Yeah.
earn additional income.
Sure.
Costs are still high, and they ain't going down. It's
Yeah.
going to be 2 to 3 years before incomes start catching up with the costs. The past 2 years, you saw some areas. I don't know if you saw it again. Eggs are back up again. They're high
Mm-hmm.
again.
Mm-hmm.
Um, it, it prices have gone up 30-40%.
Mm-hmm.
So like
Mm-hmm.
I said, it's going to take a number of years before we catch up to that.
It is, guys. It just all I'm saying is, guys, if you are anticipating for this rate cut to be something of significance when it comes to the market, please don't think that, because I think it's going to be very little movement, if any. It's just not, guys. Look at the numbers, guys. It's not. Just be careful. Be careful. Now, Cliff, let's go into the scenario. What happened? Does it? There we go. Okay, it's just frozen my hand, but it is. Guys, let's dive into the topic of discussion here. California's insurance meltdown for their home and auto crisis. It's unfolding, guys. California right now, guys, is having a serious home and auto insurance issue. It's literally insurance companies going to war with the government of California. And guys, it's not pretty at all. And let's take a look at initially the home situation real fast. And then what happens is once we do that, guys, we'll dive into the auto side. Guys, this is not pretty at all. It's not pretty at all. And I thought it'd be wise for us to kind of look at it and see what we can kind of do to kind of see what's actually going on. And then Cliff and I will give our commentary. Here we go. Let's see what's going down.
The insurance industry here in California is in crisis. Tonight, KCRA3 Investigates reveals another company will stop covering homeowners here in California. American National says this could start impacting customers by August.
Yeah, this is just the latest insurance company to announce changes like this, making it difficult to find and keep insurance coverage for some Californians. KCRA3 Investigates Liz Mitri talked to some homeowners affected by the emergency and state leaders who say relief is on the way.
For homeowners,
it's getting harder and harder and more expensive.
It's a problem. It seems unsustainable to me.
and those trying to help them,
The insurance industry in California is in a crisis.
things have never been harder.
I feel helpless. I feel frustrated.
Kelly Life has been an insurance agent for 36 years.
People used to shop insurance. Well, now you don't do that anymore.
In the last year, 7 of the 12 largest insurance groups in California have either
Jesus.
paused or restricted new homeowner policies.
It is a crisis. There's not enough carriers that are willing to write business, and the ones who say that they are, they make it so difficult.
So, Cliff, seven insurance companies are refusing to write policies for homeowners in California. Man, what's behind that, bruh?
Oh, man, it's simple. We had inflation. Prices went up. You know, that car you had, maybe you bought it, maybe it's 20, 30,000. Now it's 40,000.
Jesus.
The cost to insure it is going up. Plus, you have to add on to this. So it's multifaceted, right? So stay with me.
Yeah.
You have the prices going up. So the house that was 500,000, maybe it's 700,000. You're like, cool, but you have to insure a $700,000 house.
Correct.
Plus, the state of California is adding additional requirements for the insurance companies that they have to follow. Those additional requirements is additional costs.
Sure.
And if the insurance company looks at their books and say these numbers don't work, then they can't do business.
Correct. So literally, guys, what's happening is you have the insurance companies. Right now we talk about the home side right now. going at war with the government of California. And what's happening is, as insurance companies are saying, yo, it's costing too much to cover all this, from homeowners insurance to these wildfires as well. It's costing too much. So they're having to pass that cost on to the consumer because of inflation, right? So when something happens to a house, the insurance company has to cover it. Well, the cost of goods, COGS, are going up. So if it costs more to rebuild the house, it's going to cost more to what? Cover the house. It's real simple, guys. It's the definition of inflation is too much currency flowing to too few goods. This is the fruits of an inflationary happy economy. Cliff, you agree, big dog?
Yeah, and the problem is that we have inflation, and where the inflation is coming from, and let's not argue with it. There's no like other countries that are causing our inflation. There's no
Yeah.
businesses that are causing our inflation. The government is printing too much money
Correct.
that is causing prices to go up. And the problem is that's not stopping. We are still spending that money today. We have billions we ain't spent yet.
Yeah.
You can expect this inflation rate, which is artificially adjusted. Dale gonna tell you, we've been discussing with y'all. It ain't, they say what, 2.7, man. It's like 3.7, 4.7.
Yeah.
Really.
Yeah.
They manipulated the numbers.
Mhm.
Man, Dale, what do you see happening? What are you gonna do if you live in California?
You got to do one or two things: make more money, right? Because of the fact that their policies, California is significantly overregulated. Which, when it comes to a building perspective, from a builder, that adds more to the bottom line, right? In addition to the cost of goods and services, really the cost of goods, right? The building materials are costing more. So you're adding to the bottom line of the builder, which is providing a service of what? Building new homes, right? Or if you're buying a property, then renovating that property. Again, you're having to buy, your GC is having to buy materials to finish that type of renovation. Everything is inflated up. So when costs come up, guys, right? When it comes to regulation or cost of goods due to inflation, companies are going to pass it on to you, the consumer. It's not hard. Or do you got to move out? You got to move to another state to where it's more economical. So that's why you've seen I think it's $1 trillion leave California, leave New York, and they're flowing to Texas, Florida, Tennessee, some areas of Alabama, some areas of Mississippi as well. They're going to these more economically business-friendly environments, states, to where they can actually live, have a chance of living, because it costs so much. In California, they're not going to change, guys. They actually have a law right now, guys, where they're going to issue loans for illegal immigrants right now.
Yeah.
More printing. That don't make no damn sense. So again, that's another cost to you, because why? They're going to charge higher in taxes to be able to pay that. That's all they're going to do, guys. That's it. Am I right, Cliff? Am I wrong?
No, you're right. I mean, it's because you got to think, who else can spend $1 trillion? There's no company going to spend that. And if a company is spending even 100 billion, they gonna get an ROI out that. They gonna spend it in a way they gonna get something, at least $1 per dollar back, right? The government will spend it and waste it. It'll just go into the economy and cause everything to go up. So, especially when you talk about home prices, to me, that's the same thing. They're just wasting it. If they paid 150,000, Dale? What exactly do they get? What does the government get in return? What's the ROI on that 150? You could be spending that on many other things. You could pay that just debt. You could spend that money just paying down debt, so that you could lower taxes for your people. Instead, you're giving money away, which is causing taxes to go higher.
Exactly. Again, guys, inflation is a stealth tax. You can't see it.
Right.
You don't know when it's coming. In addition to higher tax that the government is actually charging you guys. They're floating, guys, tax and unrealized gains. They're floating that out there right now.
Man, that's a joke. That's a joke.
But that is real, bro. That is real. That Moore versus the U.S. government, went to the Supreme Court, not to the Ninth Circuit. They ruled in favor of the unrealized gains. The Ninth Circuit did. So now they believe it's at the Supreme Court right now. I don't think they ruled on it yet. I don't think they have yet.
But the argument is they already do it. That's
Yes.
the argument. And so since they don't need, go ahead.
And do you know what they're using as the argument? Property taxes.
Yes.
Trash.
Which I don't like either.
Yep.
Just let y'all know. I'm not a fan of that. I think there's better ways of going about it, about taxing the citizens and all that kind of stuff. The way that we go about it, because we all go to work.
Yeah.
We put in time and effort, and then we pay for all these taxes to get done, and you're hoping to get an ROI on that. You're trying to get some kind of benefits for that, and it just, the amount that you're paying in is not the result back. I always say it like this, man. I pay maybe $200 a year for Amazon, and the ROI is ridiculous. I spend that $200 easy.
Crazy. But the thing about it is the government's not worried about the ROI.
Right.
The game is to grift. The game is to manufacture problems, prescribe solutions to more than further the problem than to prescribe solutions. The whole thing is, if they provide a solution to solve your problem, they're out of a job. They're out of a job, guys. It's real simple. Now, Cliff, let's go to auto. Now, the same thing is going on with auto insurance now. Let's see what's going on with this auto insurance, man. This right here is crazy. I said, what the hell is going on here, Cliff? Listen to this, man. Listen to this. Here we go.
Here in California are soaring.
Rates could actually more than double this year. KTLA5's Eric Spillman live in West LA's Sawtell neighborhood to answer what is going on, Eric.
Oh, no,
why is this happening?
That is my question. And you want to shake your fist because, let's be honest, nobody likes to send money off to an insurance company for car insurance. But you know what? Here in California, we're sending more and more money away to those big companies. Let's go over the numbers, shall we? And this is going to be kind of depressing. They come from the insurance tracking company Insurify. And let me show you the number that the typical car insurance policy, how much it will cost here in California. $2,461. Can't even read my own writing. $2,681. That's even worse.
Jesus.
Okay, that's for a driver between the ages of 20 and 70 years old.
Good Lord.
With a clean record and a $1,000 deductible. That's a lot of money. Why is this happening? Well, it's not just California. Rates are going up across the country. Insurance companies say that they're just passing along their own costs, which are going up. Repairs for cars are more expensive.
Jeez.
Newer cars have high-tech gadgets and computers that cost a lot to replace if you get into a crash. Also, there are more accident claims. People have poor driving habits.
54%
So what is it about
increase?
California that's making it worse for us? Why do we have some of the highest rates for car insurance in the country? And why is that alarm going off? I'm not quite sure, but here we go. Well, there is a new law going into effect next year that increases the liability limits for auto policies sold in California. That means insurance are going to be responsible for larger payouts. So they're charging more. You also have insurance companies leaving the state of California. How can you save money? Let's go over some ideas from Consumer Reports.
So, Cliff, what I'm hearing, what are you hearing there, Cliff? What'd you hear there? What'd you hear there?
Man, what I see is the insurance company, he even said it, passing along costs. Because if you're insuring something and the cost of that thing to fix it goes up, the insurance has to pay that. So they got to charge more for that policy. That's just basic math.
Oh my gosh, a 54% increase. That's crazy. $2,681, Cliff, for a clean record driver, pristine, with a deductible of $1,000. That's crazy town. Wow.
Yeah, it's wild, man. It's wild. I mean, it's because and I'm looking at it right here. I'm going through now, and I want y'all follow me. Y'all saw that? What was it? It was 2,861, right?
2681.
2681. All right. Yeah. I just pulled it up real quick. I wanted to see. In California, the average car payment for a leased car, $586.
A leased car? Wow.
for a leased car is $586. The other one is right around there. So let's just call it $600.
Okay.
That's average. So that means you're paying $750 for a car. One car.
Wow, Cliff, I have 3 vehicles, and I pay $600 total for all 3 in insurance. I pay like $580. What the for one car?
Yeah. I'm saying with the loan, with the lease payment plus the insurance is about $7. It comes about roughly $750.
What's the rate? What rate is it quote? $650? No, what's the rate that's quoting you for the loan? Because you're incorporating the loan payment.
It's for a lease. They have the lease, and they
lease. Got it.
About the same. Yeah.
So the payment. How much is the payment?
Payment is $586.
Oh, and then the insurance is what? Is
$225.
Damn.
This is average. I'm just going with averages. I'm pulling it up on where's the this is bank rate. If you pull up on bank rate, you'll see. Now, new cars is $735. $523 for average. So that means if you're in California and you got a used car, that's $523 plus your $225. Yep, you're paying $750 per car. If you have 2 cars, you're paying $1,500 a month to have 2 vehicles in your home. And think in Dale in California, you already know if you in LA, San Diego, Hollywood, all them areas, San Bernardino, Anaheim, you out that way, your monthly payment on your mortgage or your rent is easily $3,000, $4,000. I'm talking about for a 1,000 square foot home, 3 bedroom, 2 bath, you paying $35,000, $4,000.
Golly.
Brother, what's that? What's that, brother?
Wow. Wow. That's what I'm saying. Brother, that is terrible. Man, hold on, man. Come on, Boosie.
Dog. Come on, man.
This is, you came in. Now, Cliff, how is this happening? Well, let's bring in someone that actually has lived in California for the majority of his life. Pastor David and his squad, guys, they're going to do a quick synopsis of how this happened. Now, me and Cliff have told you what it is. Let's see if what we're saying exactly is correct. Let's go ahead and put our perspective under the microscope and see what's going on. Here we go. Let's see what they got to say real fast. Here we go.
California auto insurance costs set to rise by 54%. News report says this is ABC. Rob, do you have a video on this, or it's like a 23-second video?
I do. I have the newscast where ABC reports on the jump.
Let's do this. Let's go to my beautiful Ty. Go and play this clip.
By the end of the year, the typical auto insurance policy in California set to rise by 54%. That's according to a new report by Insurify. Compared to 2023 as well. Right now, California's average annual premium is around $1,700, but it's projected to rise to $2,600. The jump due to increasing claims, storm damages, and costly repairs.
By the way, is it Insurify or Insurify?
Insurify.
Why did he say Insurify?
Because he's reading a teleprompter with a bad tie.
That was like that was a
Ron Burgundy moment.
That's a Ron Burgundy moment as well. But let's kind of go through this. Forgive this man. By the end of the year, typical auto insurance is going to go up 54%. And by the way, you may ask and say, but that's everywhere. That's everywhere. Look at this right there. Let's break that down. According to a new report published by Insurance Tracker, the cost of full coverage across the U.S. is set to increase 28% during that time period. But some states, including California, are seeing a year-over-year rate hikes of more than 50%. June of 2023, full coverage was $1,666. A month ago or 2 months ago was $2,417. By the end of the year, it's expected in California to be $2,681 in the state of California auto insurance. And meanwhile, folks, insurance carriers are leaving the state. They're flat out sitting there and saying, there is no money to be made in this state. I'm out. Mm-hmm. It doesn't even make sense for us. Geico shut down their 38 office. They're like, we're done. We're out of here. More and more carriers are leaving. Wow. Because the state of California, Tom, are you following how the Department of Insurance is putting in a. I don't know if you're following the FAIR Act. Are you close? Are you?
Yeah, I know
fully
what you're
worded
talking
the FAIR
about.
Act. Go ahead. Give us a little breakdown of it.
So the California DOI is basically putting in price controls.
Tom. هو اسرائيل همزومة أبو مية ليلة خم دي خدمة شات لما قناش Go ahead. Go.
Not a man or woman alive doesn't enjoy a delightful coffee.
Right.
No, what the California Insurance Commissioner, the DOI, there is trying to do is is basically price controls, because the insurance carriers are bringing forth fact-based analysis that said the risk of theft in California is higher, so that's loss.
Yep.
But inflation has decimated the labor rate, which has gone up 33%, and parts are up 30%. So, Vinny, that means if your car crashes and I'm your insurance guy, I'll say, hey, pay your $500 deductible, and then I have to pay the rest to the shop, right? But I just have a 30% increase in parts, 35% increase in labor, so that's killing me. So what do I have to do? I have to charge you more.
For every year, not for the
every year, because
does the deductible go up, Tom?
No. Your deductible
Just
stays whatever you want to keep it. And by the way, you probably move your deductible to $2,500, trying to get your insurance down. But now your deductible's higher if you have something. And so what the California DOI is basically trying to do is price controls. And so the California insurances, Pat takes his insurance company, goes to Sacramento, and says, look what's happened to labor, look what's happened to parts, look what happens to risk of theft. Man, I need to raise rates here in California, and not a little bit, because I can't make a good business. No, you are going to be, subject to the FAIR Act, and we're going to control how much you can go up each year. And he said, okay, well, then I need to tell you about the Leave Act. What's that? I'm leaving California and doing more business in Georgia, Florida, and Texas. Have a nice day. And then they're like, the first time it happens, California said, yeah, whatever. But guess what? They keep saying, yeah, whatever, and there's not enough carriers to cover Californians.
And by the way, are you following the dollar amount of the FAIR Act?
No, I've not got into the quantitative.
Okay, so Adam, do you have any thoughts on this before I go into the FAIR Act?
Yeah, of course.
Go ahead.
So, Cliff, the guys after that, they talk about the FAIR Act, and it goes a little bit longer, and that's fine. You're welcome to go and look that up and go listen to what he's talking about the FAIR Act. Cliff, do you agree with the diatribe, what PBD and Tom talked about when it comes to what's going on in California when it comes to the insurance?
Yeah. I mean, everybody gets, and I think there's people get a bad idea about big business, right? They think they're the reason they're these rich guys, they're getting all rich. Really what they did is they founded the company, so they owned a lot of equity in the company.
Correct.
That's how they got rich. It's not the monthly payments that's making them rich. It's the equity. You could have companies that are losing money and still have huge equity. Uber being a good example of that. Uber wasn't profitable for years. Amazon wasn't profitable for years, still worth billions, right? So you got to understand, if you want a piece of that, if you start seeing these insurance companies going, man, we got to raise rates, or they're making, they want to buy their stock.
Yeah.
Buy their stock. That's your way of investing into those big businesses. So you get a piece. You think McDonald's is charging too much? Buy their stock, because you know they're charging and making revenue. You can participate in that. That's your way of doing it. And the problem is the state is coming in and thinking that they can tell big businesses how much money they should make and help managing it. But the problem is that the states don't view their constituents as customers.
What do they view them as?
Oh, they view them as piggy banks. You know what I'm saying? Really, they view them as. They say, "Do what we say or else," and it never works. It never works.
Price controls, guys, if you look at the history, there's nothing new under the sun. If you look at the history of price control, it has a 100% failure rate. It always fails. Now, why does it fail? Because the government, right, the one trying to control the prices, is not involved in the day-to-day operations of the production of the goods and services. So how do they know how much it costs for the companies to produce said product or service? They don't know. This is all theory by them. This is what I always say. It's theory, the government, right? versus reality, real world companies. Yeah, people that are in government that are operating by theory. I call it pretend, right? Pretend that you actually have people that are actually real world operators, investors is actually in the real world. Too many times you have these theorizers in the government who have no experience at all in any industry, making decisions about the industry without having any type of knowledge base there at all. That is a recipe for a failing business model and government. Go ahead, Cliff.
Oh no, I'm listening to you. Go on, like tell them, like don't you like for example, right? You need to build a house. Me and Dale got you. You need to
Yes,
fix
sir.
a house. We got you. You want to do some commercial? You want to do all that? We got you. We the people to call. You want to start a restaurant? I don't know if you want to call us.
Don't
We
call
don't
me.
know that business. I'm not
No.
sure about how the production goes, how they get sales, market. That's an entirely different business. So
Correct.
when you have the state coming in and telling people how to run their businesses, how can one person know how each business is made? How complicated our economy is real tough.
Yep.
How from electronics to production to manufacturing to shipping to marketing
Yes.
to accounting.
Yes.
There's too many things for the state to understand. So I want to, but here's the thing, man. I want to start focusing on solutions. What can
There
you
we go.
do, right? If you're an average person, this is and my big thing is this because I kind of that's my big thing. Dale's got big business. That's his focus. That's what he does. Mine is what I call average man rich. Right? Average man rich. What can you do to simplify things and do well for yourself? And my thing is lower your costs,
Yes.
increase your revenues that you
Correct.
can do as an individual.
Correct.
What we
Correct.
talk on this channel is, I say it every time, one property could change your life.
Just
Why
one.
do I say that? Because you can get a property and you could literally have all this inflation that went on. You could have benefited. You might have a property worth 150,000 more. You just made
Right.
150,000 off one deal. And me
Preach.
and Dale talking about doing one deal a year. Nothing
Preach.
crazy.
Preach.
And we
Preach.
can even help you get there. We'll walk
Correct.
you through. We've been through it. Dale, you ever overspend on a house?
No. Not no. I can't say no. Early in my career, yes. Now it's virtually, I would say no. How about you?
Right. Yeah. Oh, exactly. Early on, yes. Right. You know what I'm saying? My point is to say that we've gone through a lot of these issues to
Correct.
help walk you through these solutions.
Correct.
So that possibly maybe you're trying to do average man rich, maybe you're trying to do like Dale and go big business,
Sure.
private equity. You know what I mean?
Yeah.
Try to do that big boy game. So I think you just got to figure out what solutions work for you. But if I'm a Californian, I'm gonna do like BizDoc said, I'm leaving.
Yep. Now, again, we talk about solutions. I'm putting this up. What type of deals are coming? I'm gonna diatribe on this. I want you guys to look at the recipe here. Okay, I'm gonna use the recipe for a minute because when it comes to recipes, you actually have different spices when you're actually making a meal, right? So what's going on with the recipe when it comes to the situation, when it comes to homeowners as well as auto? But let's focus on home. Well, whenever the cost of living goes up, right? Grocery stores, things of that nature, and inflation is outpacing your wages, right? Then also the cost of living is going up when it comes to your insurance to your home, right? What is that the recipe for? Chaos, a crisis. So what deals are coming? Guys, this type of environment that's brewing is ripe for those great deals. Let me give you an example. I'm gonna give you two. The first one is a property that Cliff and I actually acquired in and our partner James in Jackson, Mississippi. I'm using Jackson for a reason, right? It's a mid-tier town. We bought one for $15,000. We put 40 into it, so we all ended at what 55. ARV was 110. 110. The property was on the market for what 45 to 60 days. We came in and bought it. There's a plethora of those deals out there. Why? The environment in Jackson is ripe, and Cliff and I are ready to take advantage of that thing. Number two, back in 2007 and 8, when the debacle happened with the mortgage crisis, What was the most popular type of investing going on back then, guys? It was this one, subject to investing or sub two. Now, why did I say that? Remember that recipe: high cost of living, right? High insurance, right? Inflation outpacing wages. People can't afford to make the mortgage payment. They got two options: foreclosure, short sale, which those two options destroy their credit, or someone comes in and uses the strategy called subject to investing to acquire the property, therefore solving their problem. Guys, I bought 8 properties at one time with this strategy for $0. Let me say it again for the folk in back row. I bought 8 properties in 3 different states: Missouri, Texas, North Carolina, from one guy, right, who lived in California for $0. The rate was 2%. I was charging 10%. I was making more money than the bank. Holla at your partner. This is coming. It's coming. Now, do I invest in California? Hell no. No, because it's not business friendly. But you better believe I'm looking to say, okay, wait a minute. Is this the time I can come in and actually buy properties so cheap that this regulation, I won't feel it? That's a possibility. Am I right, Cliff?
Right.
And that's what me and Cliff are looking at when it comes to California, New York, New Jersey, Massachusetts, New Hampshire, Washington State, Oregon. Notice I'm naming these more liberal-leaning cities.
Illinois.
Not to get political. Illinois. Not to get political. What I'm saying is those states are more heavily regulated, which adds more cost to the investor. Does that make sense, Cliff? I'm off base.
Nah, 100%. So, for example, we're trying to solve problems. This is what we do with housing, right? It's very tough to go through the process of going to the city, filing your necessary documents, and trying to get them approved. The faster they do it, the faster we can move and do our job. But when the city takes 2 weeks to get back to you, then you got to get for reapproval, get re-inspections. That slows the properties, that slows us down. And remember, there's 1,000 investors like us, and you slow down 1,000 people who could have done 3,000 houses because they could have done 3 houses that year. Instead, we only did 1 or 2.
Correct.
That slows everything down. That's less. But think about it. You also have to remember this. With those regulations, Dale, we do less houses when there's regulation, right?
Correct.
And what that means, less transactions.
Correct.
That means realtors aren't getting paid as much. Contractors aren't getting paid as much.
Correct.
Insurance agents aren't making money. Everybody makes less money the less transactions there are. So not only does it cause prices to go up, it causes you to be poorer in return.
Correct, guys. So again, guys, this is the reason why Cliff and I are doing this here, guys, to pivot real quickly here. All right. If you could, no matter what platform that you're on, if you're on TikTok, DM the word real estate. If you're on Instagram, DM the word real estate to me. And what happened is our team will send you out a link to download our free ebook called Distressed Property Investing. It's free. It didn't cost you a dime at all. If you're on YouTube, Rumble, or any other platform, real simple, in the comment section, say the word real estate. Put in the word real estate, and we'll get a link out to you for you to download, right? Download the free ebook. Now, why are we doing this, and why is it free, right? Well, our philosophy is if we can actually teach you how to locate a good distressed property in your town. Number 2, vet the deal to make sure it's a good deal. Number 3, be able to structure it the right way. We will fund your deal and profit share. I was talking to a good friend of mine, Brad Adamson, about this earlier today. He said, "Say what?" I said, "Yes. We're trying to take out all excuses when it comes to real estate investing. I don't got the credit. We got it. I don't got the money. We got it. I don't got the intellectual IQ. We got it. I don't got the banking context. We got it. I don't got the title company context. We got it. We got all that you need. Now it's up to you when it comes to effort. That's it. I don't know about you, Cliff. If I actually had an opportunity to be able to download a free ebook on how to tell me how to locate a distressed property, would you go do it?
Oh yeah, all day.
It's free. It costs you a dime. It's literally free. We don't want nothing else from you. Just to give you assistance. That's it. That's it, guys. And we talk about, if you're on TikTok, guys, please DM me, direct message me the word real estate. Don't put it in the chat because I won't be able to see it when we actually end the live. If you could, guys, DM me the word real estate. I promise today we'll get a link out to you. Today we'll get it out to you guys. Today. If you want to say anything at all, man, before we get off?
Man, you're one deal away. Hop on, get that ebook, man. Join us, see if we can help you out.
That's it, guys. And lastly, guys, we actually have Cliff Hunter. Guys, to have a licensed appraiser on the screen to be able to counsel you on how to understand the proper comps when it comes to an as-is value, comps means comparables, or ARV, or after repair value, is priceless, guys. Cliff, do most investors, are they able to talk to a licensed appraiser before they appraise the property?
No.
So how much of a blessing is it to have someone like yourself on the screen, and also you see his website down there, hunterappraisal.com, guys. You see it, to reach out to you and say, hey, I'm looking at buying this property. Can you help me out? How priceless is that?
Oh man, it's a huge benefit, right? Because a lot of times people aren't sure what the process is or how we're even coming to the valuations, and they think that they have an idea, or they think they know, and I promise you don't, because it takes years of going through it and maybe hundreds of appraisals. I'm saying hundreds. You may have seen a house once or twice. I walk through houses every single day, so
Correct.
I get that experience of seeing what's in the market, what's happening, what's working and what's not.
Correct.
In a way that you don't, because you don't have the opportunity to walk 2-3 houses a day. You just don't have the time. So I bring that time to you. I save you time. I save you a lot of money by telling you, hey, do this, not this. Why would you say that, Cliff? Because I'm seeing it. I appraised 3 houses. I saw other houses that were appraised. So hit me up at hunterappraisal.com. We can do a one-on-one. We can go through your deal. We can go through just even a regular appraisal that you have. And at least you can learn something and learn how to exactly view doing this business the way that it's supposed to be done.
Correct, guys. Again, guys, hunterappraisal.com, guys. Cliff has saved me personally hundreds of thousands of dollars from a appraisal standpoint, or when it comes to understanding the scope of work, GC standpoint, guys, investing standpoint, because of that knowledge that I get up front, right? That's what it is, if that makes some sense. And if it makes sense, I will fund that board with you. I'll fund it for you. I will do that. I'll partner with you and we can fund it together. I got you. I got you on that one. Now, also, guys, for those that don't have the ability to DM me, don't know why, but it is what it is. You're welcome to scan on this QR code right here, or if you're on Rumble or YouTube, go down to the link below. You'll see it. Click on that link as well. Scan on the QR code right here, guys. It goes right to the same place for you to be able to download the free ebook. Again, it is free. We don't want nothing from you at all. We just want to give you access, right, to this type of information, guys. Well, guys, man, that's all I have to say. Cliff, you want to say anything, man, before we get off, your dog?
Nah, man, that's it, man. Hope y'all got a good weekend.
Yeah, have a good weekend, guys. Hey, man, spend time with your boo if you're married. You know what I'm talking about, with your girlfriend or boyfriend. If not, man, relax a little bit, take a load off, but also read a book. Read a book. Renew that mind. Renew that mind. Exercise the mind, guys. All right, guys. You know I'll be in it every single time before you leave and right here. Can you see that thing, baby? Because we look better than you. It's okay, baby. Take that damn picture, get your mom to holler at you about that. God bless you, guys. See you next time. Peace.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.